the estate tax does not apply to assets that you leave to charity. And so there is, first of all, you should be thinking about if there is an organization that you would like to benefit after you pass away. The most straightforward approach is, okay, well, I'm going to leave a bequest or a distribution out of my revocable trust when I pass away. But there are actually many things that we think you should be thinking about and doing now, which also will save estate taxes, and in light of estate tax law changes, we think are very important to consider. Some are relatively more straightforward than others. I mean, you could create a charitable trust, whether that be a lead trust or a remainder trust, which would provide, some kind of income stream to a beneficiary and a remainder interest or a lead interest to the charity, however you structure that. And there's ways to structure those entities as well so that you get some income tax benefit too. And in light of possible income tax changes in the future as well, a lot of estate tax planning involves an income tax analysis as well. So don't forget about the charitable strategies. Start thinking about them now. Time is on your side. The sooner you get moving, the better effect and benefit it's going to have for your family. Donor advised funds are really a hot topic right now. Years ago, many clients wanted to have sort of their private family foundation, right? Everybody wanted to have their family foundation. And what was really determined is that they're quite costly and, can be difficult to administer. You have annual filings with the IRS, getting the actual exemption for a 501c3 status. And so a donor advised fund, I like to call it a poor man's foundation, though it's really not for poor people, of course, but it's the cheap way to have a family foundation. So basically there are many organizations, advisory firms, brokerage firms that have sort of their donor advised fund accounts. You can open a donor advised fund account. You can name it the, say, CESA Family Foundation account, and then you put money into that donor advised fund account and you make your charitable distributions during your lifetime directly from that donor advised fund. When you fund that account, you get the income tax deduction at that time. It also reduces your taxable estate by that full amount. But yet you still do actually have a little bit of control over those assets because you get to determine which charities receive distributions out of your donor advised fund. So we think it's a wonderful tool that's often overlooked and should really be considered. And you should be talking to your financial advisor about that as a possibility for you. But ultimately, we love talking with clients with their charitable strategies, setting up endowments, gift agreements with universities and hospitals, all of these things. Our advice again is think about them now, not later.